Hey guys, this is Andrew from Trading Mastery and welcome to today's trading tip. Did you know that every business will eventually die? As much as we love to fall in love with the businesses that we own in the share market, companies like Apple and Amazon and Nike and Costco and Macquarie Bank and all of these wonderful businesses, Nestle, eventually they die. Their economic moat is very, very difficult to sustain over a long period of time, and competitors usually come along and eat away at that moat, and eventually those businesses disappear. If you have a look at the Dow Jones, for example, the top 30 stocks in the United States, those businesses today, I think there's only one business in the Dow that was in there 30 or 40 years ago. What we tend to see are businesses go through different stages of what we call the business life cycle. When a new business starts out in the share market and lists on the New York Stock Exchange, the NASDAQ, the FTSE or the DAX, or even in Australia on the ASX 200, or maybe the Nikkei in Tokyo, it's probably a high growth business. And then it will go into what we call a growth stage, and then what we call a mature growth stage. And then a business will go into a mature stage, and then ultimately it will start to decline. And an example of that in Australia is a business called Telstra, a business that had an incredible moat for decades. But unfortunately, one of the things that turns a business from being a mature growth business into a stable and declining business, often it's the management. And when you look at many of the businesses today that are thriving and doing incredibly well, they're businesses that still have the founders of those companies controlling the vast majority of the shares and still running those companies. The guys that still run Google, Mark Zuckerberg that runs Facebook, Warren Buffett that runs Berkshire Hathaway, Jeff Bezos that is still the executive chairman of Amazon. And although Tim Cook is not the founding partner and Steve Jobs, he certainly has a vested interest in Apple and is an incredible leader of that business. When you look at many other businesses around the world, such as Virgin, Richard Branson, when companies lack leadership, when companies lack management, that's when they tend to go from that stable growth stage to the stable stage to ultimately declining. So every business eventually dies, and as investors, it's up to us to make sure that we understand which phase of the business life cycle the businesses we own are in. Is it high growth? Is it growth? Is it mature growth? Is it mature, or is the business declining? And the only way to have an understanding of that is to own a concentrated number of businesses and really watch those businesses, study those businesses and follow them exceptionally well. And people that have diversification with lots and lots of businesses in their portfolio don't tend to do that. If you'd like to learn more about how to get started the right way, how to build a wonderful portfolio for meaningful results, jump across to our website, tradingmastery.com.au. There is a 7-part mini course there waiting for you to help you get started the right way. And I look forward to helping you make every year going forward your best financial years ever. Have a wonderful day and happy trading.